What is going on, everybody? It is Wednesday. That means there's been a whole heap of opportunities on Monday and Tuesday. So if you have been getting active in the markets in any way, shape or form, whether you've bought, sold, whether you won or you lost, do let me know down in the comments. And I'm going to give you guys an update on what's been going on my side shortly. But check this out. I want to share this with you guys. We have OpenAI launches new AI model GPT-4o and desktop version of ChatGPT. What this is basically telling you guys is how quickly AI is advancing. AI hasn't even been around that long, and we have refinements, we have improvements, we have V2s, V3s coming out in rapid fire. Now, whether we all like it or not, the reality is AI is taking our jobs. We have self-driving cars, which are taking over the transport sector. We have robotics, which is taking over warehousing. We have machine learning, which is taking over media. We have chatbots, which is taking over customer service. The list goes on and on and on. Regardless of what space or sector you're working in, the likelihood is AI has a very good chance of replacing you in the near future. That's why I tell you guys it's so important to develop the ability to make money outside of your 9-to-5 job. It is one of the best things you can do for yourself in 2024, and the market presents the best opportunity for you to do that because you are not tied to any employer. You don't have any links to anything. You are completely independent, and the amount you make is entirely up to you. That is why I say options trading is one of the best skills, if not the best skill you can learn in 2024 to completely protect yourself from this AI revolution that is taking place. And you see it here. It's only going to be a couple of more months before we have a new version of AI that is smarter, that is better, and has the ability to go ahead and take over human performance because it's cheaper, it is faster, it's more accurate. So I just want you guys to do yourselves a favor and do develop this skill of making money in the markets. It is very powerful, and it is the safest thing you guys can do for your future selves, right? I want to share that with you guys. But before we go any further, let me show you this. I had an email from one of the guys over the Patreon because they jumped into a play that I posted over in the Patreon on Monday. Okay, that trade generated Robert almost $1,000 in profit in literally 2 days. Should be even more than that now because I've just seen the price and it's gone even higher. So he's walked away with $1,000, and that can do a lot for him. But the key thing is that is repeatable. Okay, this won't be the only $1,000 he makes. He's going to be able to generate that over and over and over again. All right. So if you guys haven't already, make sure you tap into the Patreon. The link for that is down below. I want all of my guys over there, and there's no reason why they shouldn't, to make an extra 1,000 minimum per month. And we got Robert already made his 1,000. No reason why anybody in there with the trades that I post, with the analysis and breakdowns on those trades that I post, with the market outlooks that I post, no reason why they shouldn't be walking away easily with an extra $1,000 a month. Guys, it's been a big week in the markets. If you guys don't already know, the S&P has hit a new all-time high. Now, here's the thing. I'm sure all of you guys will agree with me that if you have an indication of how strong the strength of this trend is, of this move is, you'll be able to make money, correct? Yes. Now, there is a very simple way and a very easy way that I'm going to teach you guys to have a gauge, have an idea, have an understanding of how strong the trend in the market is. So we have the S&P 500 breaking through, hitting a price level it's never hit before, 5294. How do we know that this is strong? Is this going to be a continuation, or are we going to see a reversal? Let me introduce you guys to the concept of market breadth. Market breadth is how much of the market is participating in this move. So how much of the rest of the market is contributing to this increase in price that we're seeing in the S&P 500? Well, it's simple. In the previous run-up in the markets, I'm sure you guys will be aware, it was mainly driven by technology. So the names like Amazon, the names like Meta, names like Nvidia, names like Microsoft, Google, they were the biggest contributors to the move. Those are the ones that created the push higher, the previous all-time high that we saw. Now, if we go and check these names, so if we go and check Meta, for example, what you'll see is it's not at its all-time high. But remember, the market's at its all-time high. If we go and check Nvidia, Nvidia is not at its all-time high, but the market's at its all-time high, even though they're close. If we check Amazon, which was another major contributing stock to the previous run-up that we saw in the markets, again, it's not at its all-time high. It's a little bit off that. And you could check any of these major tech stocks that were the reason why the market pushed higher before, they're not the reason why now. What we're seeing now is money, capital flow into other sectors in the market. So think financials, think industrials, think healthcare. Those are the ones now that are pushing the market higher. So what we have is we have market breadth. That means other sectors in the market are now picking up the slack. They are now contributing to the increase in the overall market. They're the ones that are contributing now to this all-time high that we're seeing being printed today. So what that tells you guys is, it tells you that this trend is strong. This trend has legs. This trend is one that is not just going to collapse and reverse. This is a trend that you can buy into at the right prices, at the right points in time. This momentum will continue. That is what it's telling you, because we're now not dependent on the previous dependence, like the tech stock. We now have the rest of the market supporting and contributing to this move. This is key, guys, because it means that we know that the market, obviously, at some point in time has to pull back. It has to retrace. But that means that just opens up buying opportunities, because the momentum won't stop. The momentum will continue. So if the market pushes back down to there, for example, or there, or there, or there, you have plenty of opportunities to go long, and you're not going to be looking for short positions, because you know that the breadth of the market has broadened, right? That is one of the best strength indicators that exists out there in the markets. So you guys use that to your advantage. When you get those slight pullbacks in the market, they are most definitely buying opportunities, right? Now check this out. We've got IG. So IG is a large broker. They hold millions and millions of, or thousands and hundreds of thousands of client accounts. But here you can see that 70% of IG's clients are short on the S&P 500. It means that 70% of IG clients aren't aware of this market breadth situation that I just taught you guys is going on. They are on the wrong side of the trade. This 70% is on the wrong side of the trade. What they need to be doing is being out of their positions and actually being in position to go long, because we know we have good support, good strength all around the market. But the thing is, I'm not so interested in IG's clients. I just want you guys to be on the right side of the trade with the right information that's going to set you up to be making some very, very good moves out there in the markets. Now, I get questions all the time from the members over the Patreon, and some of these questions actually have delivered a lot of value, right? And this is one I want to share with you guys. Shelly says, I bought 50 shares of GME stock at $44. I don't know what price to exit, but I'm expecting it to keep rising. In 2021, it went over $100. What do you think of GME? Should I buy more? Now, we know this week kicked off with a bit of a meme stock craze, but here's the thing, guys. If you have the ability to recognize repeatable setups in the market very easily, snap of your finger, there's no reason to be participating in meme stock rallies, which you don't have much information on that's going to support increased prices, right? A lot of it is just guesswork. That's not the position I want you guys to be in. I want you guys to be in a position where you're able to understand what is going on in the markets and able to get into repeatable, predictable setups. That is much more, that's just a much better way of approaching it than jumping into one of these meme stocks. I mean, last time I checked, unfortunately, Shelly's down in a position. I think GME was down in the 30s. You bought it at the 40s. That's a huge chunk down. But here we got, I shared with you guys Robert at the beginning of this video making $1,000 very easy, very, very easily in a repeated setup. You don't need to be dabbling into these meme stocks. There's no need for it. I mean, if you want to have a little bit of fun for a few change it, that's absolutely fine. That's what, gets you off, is what it is. But I'm trying to put you guys in a position where you see this more as repeatable, regular income. Like, you can't have that repeatable, regular income from meme stocks. Okay, so that's how I want you guys to approach it. There's no need. I mean, look, with the trade that we entered at the beginning of the week, that trade in itself is up 50-60%. That's a huge return. Okay, that's a huge return. When you're able to do that, and last week ARKK going over 100%, week before that Microsoft going over 150%. When you're able to hit those numbers with regularity, with consistency, you almost just laugh at meme stocks, and they're going up maybe 100-200%, coming down 30-40. You don't need to dabble into that. There's no need. When you're already making 50, 60, 100% regularly every week on your plays, right? So that's my take on that, guys. Do drop me down some comments below, and I'll catch you guys on the next one.